Hello traders! Okay, today I want to share with you the 5 best Forex trend indicators. Now, as we all know, it can be really tough to figure out what the market is doing, and it all seems so nice and easy when you've got these lovely, neat, nice lines drawn across your charts. However, then you get home, you open up your own charts, and all you see is this. Now, unfortunately, in reality, as we know, your charts will never be completely defined. However, indicators can definitely add another dynamic to your trading and give you an extra level of confirmation. The only thing that I would err here is to use them quite sparingly by just choosing 2 or 3, as too many can really cause you more confusion than if you never use them at all. With that said, using them correctly can boost the profitability of your trades, and that's what I want to talk about today. So, I know you're ready to get started. My name's Chris N, the Posh English Trader. Let's get into it. Okay, so indicator number 1 is moving averages. So moving averages are most useful to determine Forex uptrends or downtrends, but much less useful in ranging markets. They work by simply showing you the average price of a currency pair over a specific period of time. The two that I use as part of my strategy are the 20 and the 15-day. So when you plot these on a chart, if the 50-day moving average is below the 20-day, then the Forex pair is in an uptrend. And if the 50-day moving average is above the 20-day, then the Forex pair is in a downtrend. In trading strategies, traders are often trying to get into a new trend as early as they possibly can to make the most of the move that will follow. The moving average can help with this, as a cross of the 50 and the 20-day is a signal that the trend may be about to change, as in these following examples. You can see on the left that the 50-day moving average crossed under the 20-day, signaling the beginning of an uptrend. On the right, you can see that the 50-day crossed over the 20-day, signaling the beginning of a downtrend. So these could have been potential points for you to enter the market. However, you must remember that these should only be used as part of an overall strategy and never on their own. Okay, with that warning in mind, let's move on to indicator number 2, which is the Relative Strength Index, or RSI. Now, this indicator is what's known as an oscillator, meaning it helps you determine when a currency is overbought or oversold, and therefore a reversal of the market's direction might just be about to occur. This Forex indicator is plotted with values between 0 and 100, where 100 is overbought and 0 is oversold. In practice, traders will often use the point at which the RSI goes into oversold territory as a signal that the market direction is about to change and head upwards, so potentially a time to buy. In contrast, when the RSI reaches overbought, it is an indication that the market might be about to head back down, and therefore a potential time for traders to sell. The RSI is also particularly useful as it can be used for either trending or for ranging markets. Now personally, I use the RSI a lot. When a market is in a downtrend, for example, I'll be looking to get in at the retracements back to the higher lows. I've found from personal experience of using the RSI that because of the way the market moves when in a downtrend, I need to also plot the midpoint on the RSI itself. Often I will wait for the indicator to reverse back to the mid-level and then use when it pushes below the mid-level as an indication that the market is about to reverse. If the RSI then pushes back below that mid-level, it is a strong signal that the market is going to continue downwards, and therefore I can make money from the continuation of the downtrend. Now, for more information on identifying a trend using highs and lows, I recommend you see my video, How to Determine Forex Trend Direction, which should be appearing on your screen right now. Phew! Okay, what a lot of info. Okay guys, don't let me catch you snoozing. You're not done yet. So far, it's all been good, but it's about to get much more interesting. Without further ado, here we go for indicator number 3, which is the Stochastic. So this Forex indicator is also an oscillator, just like the RSI. Now personally, I don't use it. However, that's not a reflection of its usefulness. It's just that I've got used to using the RSI, and traders tend to be creatures of habit, using either one or the other. So really simply, it also shows oversold and overbought conditions, but is unique in the fact that it consists of 2 lines. This adds another dynamic to this trading indicator, as not only do you look for the indicator to be moving above the 20 level if you're looking to buy, and below the 80 level if you're using to sell, but you also look for cross of 2 lines, an added indication that the market is about to reverse. Again, it can be very useful in both ranging and trending markets, but with the Stochastic I have found that the mid-level doesn't apply as much with trending markets as with the RSI. Something to just bear in mind if you guys are planning on using this nifty little trend Forex indicator. Alright, so indicator number 4 is the Moving Average Convergence Divergence, or MACD. Trust me, it's far more interesting for your trading than the name makes it sound. This is my favourite indicator to use by far, and it can give you a lot of information about the current market sentiment. It works well in both trending and ranging markets, and there are two parts of the indicator that you are really going to want to look at. The first is the zero line and the bars that are forming either side of it, called the histogram. The green bars show an upward bias to the market and the red a downward bias. The second part to take note of is the red MACD line and the blue signal line. A cross of the lines to the MACD line being above the signal line suggests the market may move down, and the other way around suggests that the market might be about to move up. As with the moving averages, I use this trend Forex indicator in uptrends and downtrends at retracement points to assess whether the market may be about to reverse. As you can see from this downtrend, a cross of the MACD line and the signal line and a change in the histogram signaled a market direction reversal to the downside and a potential trade entry points to ride the downtrend all the way down. Okay guys, one final push before the big finale. Let's get deep into indicator number 5, which is Bollinger Bands. Okay, so Bollinger Bands are used to measure a market's volatility. It's as simple as when the market is quiet, the bands contract, also known as a Bollinger squeeze. And when the market is volatile, the bands expand. This trend Forex indicator can be used when the markets are ranging because the two bands act like dynamic support and resistance levels, with the market tending to bounce between the two bands. Traders therefore look to sell when the market has reached the top band and buy at the bottom band. Bollinger Bands can also be used for trending markets, but more to tell when a market is about to start a new trend, such as this uptrend. So when a market has been quiet and there's been a Bollinger squeeze, if the market starts to show a breakout in either direction, then it will likely continue in that direction, and traders can look to profit from this market move. Okay, so did you find this video useful so far? Wouldn't it be fantastic, or wouldn't it be great to start using some of these indicators as part of a strategy? Well then, you need to make sure you get my 100% free ebook, the 3-step trading system, which will take you step by step through how to enter high potential trades that could drastically improve your results with just 3 simple steps. Now, when you're practicing with the system, you could try out the indicators to see when they work and add another layer to your decision-making process. To download this, just type into your browser address bar www.poshenglishtrader.com/3steps. That's www.poshenglishtrader.com/3steps, and again it will show you exactly how to enter high potential trades that could drastically improve your results with just 3 simple steps. So go ahead and type that in, or just simply click the link in the video description below. Okay guys, thank you for watching this video. My name's Chris N, the Posh English Trader. Make sure you like the video and subscribe to be notified of all my future content. Share this video with your friends and let me know in the comments section how you get on with these indicators, and if you have any questions at all about them, I'd be happy to help. Until next time guys,